Hello, everyone, and welcome to another episode of Human Experience Elevated, a Hyosung podcast. I'm your host, Daniel Litwin, the voice of B2B. It's good to be back in the host's chair for another conversation here with the Hyosung team. We've got a great conversation lined up for you today as we look at our evolving payments ecosystem and some of the recent data that helps contextualize a lot of that evolution. All right, team, let's jump in. We've got a conversation today exploring one of the most dynamic topics in the financial industry, and that would be this ever-changing landscape of consumer payment choices. We're joined today by our usual guest and thought leader, Mr. Bill Buddy. He's Vice President of Banking Strategy and Solutions at Hyosung, and Bill's going to help us break down some of these key insights from the report and how Hyosung sees the landscape evolving and how financial institutions and businesses that need to adapt should adapt. So, Bill, welcome to the show. How you doing?
I'm doing well. Thanks for having me.
Always
Looking
a
forward to the
pleasure.
discussion.
Yeah, man. Always a pleasure having you back in the studio.
It's always fun to be here.
We almost didn't get you in
Yes.
due to a plane delay and a 4-hour wait at the airport. So sometimes life throws some curveballs at you.
Sometimes get a few steps in at the airport,
Exactly.
waiting for the plane to get fixed.
Exactly. So good. Well, anyways, it's always a pleasure having you in studio and pulling from your insights. I'm glad we were able to get you here in the white sofa to unpack this report. So again, we're looking at the Federal Reserve's Diary of Consumer Payment Choice. This is giving us a unique window into the evolving habits of consumers. It's a once-a-year report, and so we get to kind of contextualize 12 months worth of change by taking a snapshot once a year, right? Can you start by walking us through some of just the high-level, most surprising or insightful takeaways from this year's report? What stands out?
Well, so yeah, it's a good question. That's kind of good to take that initial high-level look at the data when they kind of lay it out. One of the things that does jump out, and you kind of mentioned in the intro, was that the number of payments that a typical household makes it just has gone up dramatically for the last 4 years since the pandemic. In, of course, 2020, it was a significant drop-off from previous years. So for the next 3 years, it was kind of add a few more at a time, continue to grow a little bit. This past year was the first year that it got back to a number above what that kind of steady state rate was pre-pandemic. So now you're seeing households make in the order of in the high 40s, somewhere between 40 and 50 actual payments every single month for things like store visits or online bill payments or just kind of buying odds and ends at a convenience store, buying Girl Scout cookies, all that kind of stuff. So it really is kind of indicative of a healthy economy, because now you have continued transactions in the marketplace, people buying things above and beyond kind of where that baseline bottom bare minimum was for a while. The other thing that kind of jumps out is that cash, because that number keeps growing, the percentage of transactions that people typically use cash for has dropped off dramatically. But from a raw number perspective, it's stayed exactly the same for the last 4 years. What that kind of shows also is that I think we've hit a floor from the standpoint of a stable level of cash usage in our economy. And there's a few reasons for that. But coming out of the pandemic again, when people were not doing in-person payments or in-person transactions very often at all, that's when we saw that precipitous dive. And there was a lot of discussion around, well, maybe cash will finally go away. This will be something that really kind of moves everything to digital. And we've hit this kind of level where it's not continuing to erode anymore. And in fact, it's pretty stable. And you see, combined with kind of that survey information around how many people typically carry cash on them, which is a pretty high number, typically sits in that 80% range where people carry cash physically on them, which indicates a propensity to use it. So we've kind of hit this level where there's going to be a lot of cash continuing to flow through the ecosystem as well. So, digital payments go up, credit card payments go up, but there's still this high level of cash floating through the economy that, for that kind of stuff, has a whole bunch of operational processes around it that really need to be considered as banks and businesses have to kind of streamline their operations.
Right.
And then kind of you mentioned the check thing as kind of one other, the third thing that really popped for me. You see kind of checks all but disappear as a personal payment statement. And so last year when that the Fed's triennial payment study came out, we saw a pretty big decline in checks to the point where checks is now the smallest category of payments. In this kind of consumer view now, the data from this past year says that on average families write maybe one check a month, which is the lowest it's ever been. So we're seeing this kind of evolution of the check where the limited times where it does happen, it's happening almost on a B2B style. It's becoming an instrument for money to move from one business to another, and much less about a consumer payment vehicle. And in fact, it's getting so low now that you start to see retailers like Target, for instance, announce that they no longer accept checks at their checkout line.
Right.
Because cash has a lot of operational processes around it to handle it. Checks have a lot more to handle it, to be able to process the payment in a way where you get your money and then you have to still hold on to the check and get it to the bank and all this kind of stuff. So as it's become so rare now, it's almost a one-off process. So retailers are starting to view it as, well, maybe we just won't do it at all, so that we don't even have to have those processes anymore.
Maybe I shouldn't have ordered that new checkbook then. I literally just ordered one with some cute cows on it.
Yeah.
Why not? Some bovines on there. But hey, you're right. It doesn't really strike me as all that surprising necessarily that the check is phasing out. It's a bit of a clunky payment system for consumers now compared to some of the easy ways that we have to share money between each other, right? With peer-to-peer payment ecosystems, and with the ways that it's been made easy to even adopt new forms of credit with buy now pay later payments, something as firm and stiff as a check and analog as a check. It kind of makes sense that it would slowly start to phase out as these other methods get a little more standardized, right, and accessible. But
the user experience is important
exactly.
there too, right? I mean, I'm relatively old, but I can still remember as a kid going to the grocery store with my mom and her writing the check to pay for it. And it was, you finish scanning all the items, and then it's like, take a couple minutes to get your checkbook out and make it the payee and write out it's clunky. Not a great experience when you can get your card out and tap it on the point of sale and okay, now you're done.
Right.
So user experience, customer experience is a pretty big factor there as well, as people are self-selecting not to use it, and then as that number goes down, then retailers now are self-selecting to not accept them anymore, and it's become kind of this kind of rock rolling down the hill, right?
Yeah, right. Yeah, and that's a great point. It's not like some executive decision. Checks are gone now. It's a natural, organic evolution that comes from, like you said, the experience in and of itself, which we touch on a lot. I mean, our whole podcast is called Human Experience Elevated, right? So, the real driving force here for a lot of this, even if it can be supplemented by new technologies that introduce things like safer payments, ease of transacting with different entities that maybe were a little more separated or siloed before. The real driver is the experience, the ease of the payment itself, in my opinion.
It's 100% an experience. Customer adoption really depends on the experience being seamless.
Right.
And like the phone tap versus the card tap is a good example of that too, right? Having your mobile wallet on your phone and using it to tap at point of sale was kind of a niche experience when it was offered, and it was a niche experience for a long time. Early adopters did it because it's kind of a cool new tech, right?
Yep.
But it wasn't significantly easier than getting your card out and inserting it into the slot, right? It was relatively the same, but the card in a lot of cases is a little easier because it's its own thing. It's a single use, that kind of stuff. Embedding the antenna in the card and making the card tap, now that is significantly easier than taking the card and insert it and wait on it and then put it back in your wallet. Now you just tap the card, and that's easier than your phone because you don't have to get out the phone and unlock it and get your wallet out.
Right.
You just take the card, tap it, and put it back in your wallet.
Exactly.
And now almost everybody taps their card at a point of sale, right? Almost every card has the antenna in it. Almost everybody taps their card. Very few people are inserting it. Well, not very few is a strong word, but anecdotally, what I see is the majority, and I think the data would probably play that too. I don't have that data point, but it definitely is significantly more popular than it used to be. And a big play in that, a big part of that is the experience and making it something that users, customers want to do because it's easier for them.
Right. And I imagine part of that is motivating this next stat that I want to bring up. Obviously, this takes into account a lot of different factors, including like ease of getting a payment card, but I want to highlight the stat point that card usage has become the dominant payment method, which is interesting, right? You'd kind of think anecdotally, wasn't it already? But it wasn't. This is actually still a relatively new trend. Over 60% of transactions now are debit or credit cards.
Right.
So I'm curious from your perspective, what key factors are contributing to this rise in card payments, and why is it that they're just now peaking to the majority point? Compared to even just a few years ago.
It is kind of ubiquity is a big part of it. Now, it's important to remember that there's still a very significant portion of the population that's unbanked and underbanked, right? So there's quite a few folks who don't have access to cards. But once you kind of get to that population that does have access, it almost becomes ubiquitous, right? It's the kind of standard anymore. You're not writing a check at checkout. You're not kind of moving money by wires, and you know, like even for like the last time I bought a car, I put the down payment on my credit card because it was just easy. Like, it was just like, well, I'll do that and I'll pay it off because I have the down payment money, but I didn't want to write a check or do a wire or whatever. I just did it that way and then paid it off, and then the auto loan for the rest, right? It's just become almost this utilitarian capability. You can use it anywhere. It's accepted anywhere. There's an acceptance, and it's again that kind of self-fulfilling kind of cycle of the more places it's accepted, the more it's used, the more places want to accept it, and it kind of becomes the chicken or the egg is the wrong analogy, but similar to that, right? It's like it's kind of that rock rolling down the hill again.
Totally.
That's going to happen.
And what's curious about this one is that it's more of like a reinforcement of an existing ecosystem of customer experience and hardware. It's not necessarily that like, okay, we're finally seeing credit cards and debit cards peak. Everyone needs to adopt credit card payment systems now. I mean, like that's not the phase we're in, obviously. So I'm curious then if this does have any consequences on the payment infrastructure needed to support the continued growth of debit cards and credit cards. Most businesses, most financial institutions nowadays, I mean, it's pretty odd to run into a place where it's cash only.
Right.
So,
in fact, you see the opposite sometimes.
Exactly, right. So what are your thoughts? Are there any consequences from that growth, or is it just kind of reinforcing existing trends?
Yeah, I mean, I maybe even turn it the other way and say, like to get there, there's alternate ways of even using your card. Right? If you peel back the cover a little bit, right? Like you think about a Zelle payment, right? It's essentially a card payment. Makes it, but because there's a different way to use it, now I can use that if you and I are going out to lunch and you pick up the tab and I want to pay you my end. Right. I would have had to give you cash before or write you a check before, and now I can just Zelle you it, right? And that's going to be a card payment at that point, or it's going to be an automatic, like a immediate transfer of funds, but it's typically driven by cards. And same with very small micro businesses that don't have a contract with a credit card company directly, but will accept Zelle and Venmo and things like that, or PayPal. Those tend to be backed by cards. Sometimes you'll have an amount of money in an account at a Venmo or a PayPal, but a lot of times it'll be backed by a card or a checking account. Checking accounts tend to then would be backed by a debit card associated with that checking account.
Right.
So it's creating additional ways to make that card useful is a factor there, and then that becomes, I think, then to kind of circle back to your question, it becomes, well, what is the best use case for businesses, for that particular business? Is it, do they have to have are we big enough to have a credit card terminal because that's kind of what the expectation is when you walk into a business, or is it like a micro business that creates at least an ability to accept a payment? Like, I mean, my kids do high school track. Going to a high school track meet used to be give them a $5 bill to get into the stadium, and now it's, well, here's the Venmo code to scan the Venmo and send them the money, or the Zelle code.
Right.
And a lot of times even they are like, well, we prefer you do this rather than cash or whatever. And that's a credit card payment that wouldn't have been a credit card payment in
Right.
the past. So it becomes kind of creating that variety, creating that, again, that experience that makes it easy to use really drives then usage because it's easy.
Yeah. The decline of checks.
Yeah.
Right? This is a dramatic decline, I guess you could say. Now we're seeing just an average of 1 check payment per month per household, which is, I guess, the lowest it's been in ever. So what are some of the impacts of that shift? You already mentioned, right, we're seeing Target kind of respond to this by saying, well, I guess we're just not going to accept them anymore if it's not even worth our time to process them. But is there anything else we should note? Do you expect to see more of those kinds of decisions?
I do. I would expect, like, once you get a big brand like that that does it, then other brands feel like they've been given the kind of the doors open to say, well, that makes sense for us too.
Right.
Because there's a lot of reasons to, like I said, there's a lot of processes around, okay, now here's the stack of checks for the day, and now I got to either scan them in the scanner I have the back office that's connected to the bank, or I got to take them to the bank, and then what do I do with the paper, and how long do I have to keep it if there's a dispute? And, you know, especially in the era of kind of the check on your app, on your mobile phone, check deposit on your mobile phone, it's a very easy fraud vector. Checks are very easy fraud vectors. So, you know, the more checks that get out of the system, the kind of harder it is to commit fraud because it's an easy fraud area that is kind of being removed. So there's a lot of kind of positives to kind of getting that out there. So what you might see is, you know, you might start seeing even ATMs that might not accept checks, they just do cash. You might see more businesses that don't accept. You might even see banks not even, you know, making it harder to buy them. Like you just ordered yours. Like I opened my daughter's high school checking account for her, and they didn't even give her any checks. Right? It was just, here's your debit card, and that was it. So I think you kind of start to see those changes kind of seep into that ecosystem too. When I opened my first checking account, it was, well, here's your stack of checks. That's the only thing you get. There's, you know, and it's like a completely different environment in one generation.
Yeah.
And you're right, it's the, you know, both reports that the Fed puts out, that the Diary of Consumer Payment Choice and the Triennial Payment Study really showed that the checks are the smallest category of payments anymore. And you look at the graph, and the graph is a very steeply sloped downward line for checks. So it, you know, there are a few countries that got rid of them completely through mandates. I think in the U.S. they're being gotten rid of completely through experience and through customer choice. And eventually, when it gets down to that very bottom end, it'll all but disappear. But still, it'll be because businesses don't take them. It won't be because the government has said checks aren't a thing anymore, right? Like has happened in a few places.
Cash is the other piece of this. Despite the fact that we are seeing a rise in digital payments, now majority of transactions on debit or credit cards, cash usage is not necessarily like bottoming out, it's stabilizing. We have an average of around 7 cash payments per household per month. 80% of consumers still carry cash in their wallets. Cash in circulation continues to rise, and it's popular for low dollar transactions. So, like we reiterate on this show often, cash isn't going anywhere per se. I mean, I know there's a lot of conversation around, you know, have we reached the point where we can, you know, finally just go all digital? And we are seeing some stores or businesses, for example, go card only or digital payment only. So it's not that the trend doesn't exist, but the data clearly shows that cash is remaining a stable part of the payments ecosystem for consumers. So, thoughts on what is keeping cash, you know, a solid part of that pie, and what are some of the consequences or some of the strategies you think financial institutions and businesses should take to continue to, you know, incorporate cash into their larger vision of the consumer payments ecosystem?
Well, so yeah, I think there's a few things, and they're kind of they're things that have remained constant, you know, for decades even.
Sure.
But one is that kind of the unbanked and underbanked population. it becomes the only payment vehicle a lot of times for those types of households. And that becomes then a very strong part of how they go to market, how they buy goods and services in order to feed their family and put gas in the car and all that kind of stuff.
Right.
Then you also mentioned about smaller payments, smaller dollar type interactions. It tends to still be pretty preferable because of ease. Again, it's you're at Costco and you're buying $140 worth of stuff because you never get out of Costco for $100.
Right.
And you pay on your card because that's easy. You tap your card on the terminal and you go, and you run into McDonald's because you really like their Diet Coke, and you get out $1.69, and
Yep.
you give them $2 because it's easier than getting your card out and say, put in $1.69 on your credit card, which then shows up on your bank statement. So that those small dollar ones are still perceived to be easier to do in cash versus card, even though I think if you did a time study, tap the card is the same for a $1 transaction than 100. Still, kind of
Right.
There's this perception that it's a couple dollars. I don't want to put that on my card. I don't want to. Right?
Yeah, right. It's like a psychological.
Yeah, there's a psychological
element.
piece
Yeah.
there. Now, there is an important part around cash too, from an anonymity standpoint that is always a hallmark of cash proponents. The reason why cash is important in the economy, because there is a very clear anonymity associated with it. Privacy is probably a better word around that type of payment versus the paper trail that accompanies every credit card transaction, or digital paper trail, virtual paper trail. And then one of the things that is always a little bit unique about cash too is it's if you are on a strict budget, it is the best, most accurate budgeting tool. Like you go back to it's the old envelope method that, again, it's decades old, but it's much better than any other budgeting tool you can have, because any credit card,
You can see it go.
you can always overdraft a credit card. You can always, spend more. But if
Exactly.
you take your money and you put it in your 4 categories of what you're going to spend for that month, and then when there's no more cash in the envelope, there's no more money to spend, and you don't go over budget. So it is now. Are a lot of people doing that? I don't think so, but it is kind of a guideline that can help people budget if they need to be on a strict budget as well. But it really kind of, there's the perceived ease of use, and there's privacy around it, and then there's populations where it's the easiest, most accessible way to purchase, really kind of keeps it strong.
Right.
Which then creates that problem, because you mentioned at the top of the show too, the amount of cash in circulation continues to grow.
Right.
So I talked about that hitting kind of a stable floor of about 7 transactions per month per family. Well, population's growing. There's more families every year, which means 7 times more families next year is going to be more cash than the 7 times the current number of families this year that happens every month, which is why there's more cash in circulation all the time. And that the opposite of the check part, right? When there's more cash coming into your doors, if you're a business or if you're a bank branch, there's all these processes around making sure that cash stays secure. Because those digital payments, the credit card payments, they come in as a record, everything's settled at the end of the day, and it's all very tidy, right? When the cash comes in, it's not quite as tidy, right? And you got this stack of cash, and it's got to get from here to there, right? And it's got to be secure, and you got to make sure that when it gets from here to there, it's still the same amount. Nothing has leaked, for lack of a better word, or been lost accidentally, or been miscounted, right? It's all got to be kind of moved from a lot of different places, and that comes with a lot of different processes. So that's businesses and banks and credit unions are really kind of, focused on how to best deal with that, because that is not going away. It's not raising as dramatically as credit card payments are. It is declining as a percentage of the activity in the economy, but as a raw number, which is important when you're talking about all those stacks of paper that you've got to take care of, that raw number is not going down, which means you've got to handle it, and you've got to continue to handle it day after day. It's, got time to make the donuts, right?
Yeah, exactly.
Again, showing that's a very old commercial.
No, I love that, man. Well, yeah, I mean, as many things are changing, a lot of the consumer payments ecosystem is not necessarily staying static. It's just the slices of the pie are still important slices,
Yeah,
right?
right.
So it's not like we're seeing this tidal wave of digital payments becoming the only method for payment, and now the whole industry needs to adapt and get rid of cash and get rid of checks. It's going to continue to be a balance because consumers, like we mentioned and like we see in this report, appreciate variety and flexibility in their payments, depending on what they're paying for, the social and almost psychological context around it as well. It's a delicate ecosystem. So in summary, payment volumes increasing. Card usage is the dominant payment method. We see a dramatic decline in check usage, 1 check per household per month. A rise in digital payments, but cash usage remaining consistent, popular for low dollar transactions. 80% of consumers still carrying cash in their wallets. Cash usage stabilizing per household per month. So that's the recap. Now let's get strategic with some final actionable bits for our audience. With these shifts in consumer payment choices, what advice would you give to financial institutions as well as businesses that are trying to stay ahead of these trends and trying to determine how this should guide new investments in new hardware, new back-end payment ecosystems, new services? What are your thoughts?
Well, so I mean, we kind of beat this drum a lot on our conversations, but cash automation is an incredibly valuable tool in that environment, and it's not limited to banks. It's a great tool for businesses as well, because any business that does take in cash then has to deal with that just the same way that banks do. So cash automation is important, and cash automation continues to evolve. And kind of at the kind of step one is kind of being up to date on the latest trends and kind of what capabilities exist, and then figuring out what's right for your environment. What level of automation is going to help you as a business, you as a bank branch, you as a entire bank network, become bank branch network for a larger bank, even mid-size, whatever size you are. What are the right tools that can help you change the way that you operate, make things more streamlined, make things more so that the people you are paying to do jobs on a day-to-day basis are doing things that strategically add to the company, not having to count pieces of paper, right? Because there's a lot of human capital involved in running a bank or running a business, and you want to be paying those people to provide value to your underlying business, right? And in a bank branch, the way that manifests itself is you're paying people to create relationships with your customers, to ensure that they know about your customers so that you're able to understand their financial needs and meet those financial needs as best as possible. You're not getting value out of paying a whole team of folks just to make sure that stack of paper stays the same size, right? So I think that's kind of an important piece, right? Understanding what technology is out there and understanding what's going to be right for you, and then working to implement it. And there's a lot of technology out there. It gets more. It continues to grow by the day. So I think that's probably kind of the biggest kind of takeaway there.
Yeah. So you mentioned this as well, right? Technologies, emerging technologies that could play a supplemental role in at least helping manage this variety of consumer payment desires and methods. I'm curious if any emerging technologies do stand out as ones that businesses should adapt to, take on. Same with financial institutions, and this could include anything from real-time payments to cryptocurrencies, mobile wallets. Any other major shifts that you think are on the horizon that we need to start anticipating around these kinds of technologies?
Well, so I think one other thing, especially kind of from a retail implementation perspective, like customer accessible type automation. Like retail ATMs forever have kind of been these small little $20 bill vending machines in the corner of the convenience store or the hotel or restaurants or what have you, that serve a very important purpose, because sometimes people need to get cash to pay for their bar tab or pay for tchotchkes at the hotel, or be able to, at the convenience store they want a couple, packs of bubble gum or whatever.
Sure.
But it's been a very single purpose device, and there's still a lot of them out there. There's 200,000 of them in the US. So it's not like they're going away either. Again, a kind of testament to how many people use cash for small transactions or all transactions. But creating additional capabilities that those devices can handle also increases that payment choice. Things like being able to provide bill payment style capabilities, which enables additional digital type transactions, or enables a digital transaction in a different way, in a more customer accessible way that might then create an experience that makes it easier to adopt that for a customer where, before maybe the only way to do online bill pay was on your computer.
Right.
Not everybody has computer and Wi-Fi, right? So providing those capabilities again creates additional ways for people to experience it, and maybe different customer experiences that are sometimes better. And then turning that into a whole host of capabilities. But then also that kind of leads into additional cash in and out, right? So now you're not just a $20 bill vending machine, you're maybe taking cash in for an online bill pay that digitizes cash. You see it a lot of times at kind of a trend at sporting venues, right? Is the whole, you've got how many dozens of different vendors at a baseball stadium, right?
Right.
All the hot dog stand, and then there's the pizza stand, the barbecue stand, and the beer stand, and they're all separate points of sale. And at the end of the day, there were dozens of places that had to all reconcile their cash payments. You see a big trend with like sporting venues where it's, they'll have a little kiosk where you can turn your cash into a prepaid debit card, and then you use a card at each one of those points of sale, because it's then at the end of the day all the cash goes into fewer spots. They still accept the cash, but it's a streamline of the operation because the cash goes into 4 or 5 or 6 spots instead of 60 different spots.
Right.
So you can reconcile it easier. You can do it in fewer locations. Businesses adopting some form of that type of an experience that kind of mimics what we're seeing on a larger scale at places like sporting venues or state fairs or things like that, might also be something that businesses could think about depending on their scale, depending on how they operate. So I think there's a few different kind of pieces on the customer experience side as well to keep in mind. But really the main thing to be thinking about is how can I take advantage of tools that already exist to streamline my operations, because it's not like this is like cutting edge brand new stuff that no one's ever heard of. They're all out there, tried and true now. You might as well take advantage of it, so that then you can kind of be streamlined, be really focused on the strategic part where you invest your money.
Yes. I mean, I think that's the best call out to end things on, right? This is not like, we're seeing these huge trends that are going to completely reshape all of the hardware and digital infrastructure that businesses and financial institutions need to have at their disposal to help serve customers and help intake these payments. In a lot of ways, the technologies are already available. They, like you said, are tried and true and tested. And so now it's really about investing in the right ecosystem that matches the intensity of payments per your customer, base, per sort of demographic, and really being honest about, what are the ways that customers want to pay at my kind of business or my institution, and then adapt.
Meeting the customers where they want to be met, not
Exactly.
forcing them to meet you where you want to be met.
And it's all experience related.
Yeah, it's creating that experience that they're gonna, in marketing they call it like the moment of joy, right?
Yes.
How do you create? It sounds like a strong phrase, but really it's very accurate. How do you create that moment of joy for the customer that makes them leave that interaction with such a positive feeling that they're going to come back?
Right. And it's all about keeping your pulse to that data, right? Target's, again, a great example. They're seeing it's just not worth it to invest in the ecosystems to process checks based on the amount of money we're making off of people paying with checks. So it makes more sense if people want to pay in other ways. If the experience is being dictated on other arenas, then we'll toss that arena out. We don't need to deal with the few people who still want to pay with checks. They likely will adjust as well as we serve the majority of our customers who want to pay with cards, for example, or even cash. So again, pay attention to the data, keep an eye on where your customers are at, And if there's going to be major changes, it's just adapting to those consumer preferences and what payment methods are going to deliver the best consumer experience. I think that's the biggest takeaway.
Perfect.
I love it. All right, Bill, thank you so much for joining us on the podcast, giving us this breakdown of the Fed's Diary of Consumer Payment Choice. I always love these kinds of data-focused conversations where we can really contextualize where the market is at today and how that should guide our strategy. So thanks for coming with all the prepped knowledge. I can always count on that. And
Well, thanks for having me. It's always a joy to be here.
yeah, of course, man. Always great conversation. So again, folks, we've been chatting with Bill Buddy. He's VP of Banking Strategy and Solutions at Hyosung. Bill, I'm looking forward to continued conversations. We'll chat again soon.
Me too. Looking forward to it.
Thanks. And thank you, everyone, for tuning into today's episode of Human Experience Elevated, a Hyosung podcast. If you like what you heard and saw, and you want to tap into previous conversations with our man Bill Buddy, or with any of the guests that we've had on the show, you can head to our website, hyosunginnovue.com. Again, hyosunginnovue.com. You can also subscribe to Human Experience Elevated on Apple Podcasts and Spotify. I'm your host, Daniel Litwin, the voice of B2B, and we'll catch you on the next episode of Human Experience Elevated.